Welcome to another brand new week. It is March 28th. Scott Riley with the Market Update Desk, brought to you by Mortgage One. Hope everybody had a wonderful extended weekend there. We had a somewhat slow week last week with data, but that picks up significantly starting today. Let's run through quick what's kind of going on in the market, what forces are affecting us today and for the week. Today we had two reports come out for home appreciation. Case Shiller and FHFA both reported that home appreciation was again up over 1% month over month. So that was a fantastic report. The projection is year over year, we're going to be, based on both of those reports, somewhere between 6.5% and 6.7% year over year. So the appreciation is not slowing down. We've talked about this. And it's just so hard to outsave this appreciation number that if you're waiting to buy a home thinking rates are going to come down, you're going to save money, unfortunately, you're losing money each and every month. Give us a call. We'll break that down individually for your specific situation. And one of the reasons why this appreciation is not going to slow down, we're not going to have the housing crash. I use an example. Back in 2009, there were 3 million more homes for sale being listed than currently. That's a huge number. Plus, builders were building 2 million homes a month for the year, I'm sorry. So these numbers aren't going to be replicated from back during the housing crash because the data doesn't support it. The underlying facts aren't there. Home appreciation, it's going to continue to grow. Give us a call. We'll help you get into a house. Now, earlier today, one of our favorite Fed members, Neil Kashkari, came out once again talking about how he is hesitant to talk about any kind of rate cut, and it's going to take many months, quote, many months of better inflation numbers to get him to be convinced to lower the Fed funds rate and change fiscal policy. It's very interesting because back during the 21, 22, he was just all over keeping the rate at near zero and actually hoping for some inflation numbers to come in. So he was wrong then. Looks like he's going to be wrong again. But he, luckily, he is not a voting member right now and won't be a voting member until 26. With any luck, maybe he'll retire. He just loves to talk about we need to continually restrict the market. And that's not helping the average consumer or home buyers. In the market today, man, last week we had NVIDIA once again blow out their numbers for earnings, and that's been carrying the stock market up. It can be real interesting, see if they can keep up these numbers, both on top line, bottom line, and forward projections on sales. The technicals right now, we've got really a neutral day going on. We're slightly to the better, but as we move forward this week, we'll get probably some additional commentary from Fed members, but we're going to get on Thursday, second look at first quarter GDP, jobless claims, and then Friday is going to be personal consumption expenditure, but also kind of going under the radar right now is when Friday is going to be when the Fed starts to buy treasuries back. This could also be a positive for the bond market. We're watching it really close. There's a chance we really have a nice positive run for this week. In the technical side of the brackets of resistance, we're right in the middle. If we can get just a little bit of a benefit to the positive side, we've got room to run on the 10-year, on the mortgage-backed security market and some lowering yield on the 10-year bonds. So that's what's going on today. We did get one offer accepted over the weekend, suspecting we've got another one that we'll hear later today. Use our knowledge. Let us help you get the best deal out there between loan program, interest rate, knowledge, experience, and helping get your offer accepted. Give us a call. We'll help you. 616-293-2189. Have a great afternoon.